Today we will discuss the 5 most important features to know and utilize on a footprint chart. Before we get into the video, be sure to follow my Twitter as I post free daily education there. The first and most important feature is the delta. This is because the delta tells us a lot of the story. It helps us recognize who is in control in the two-way auction. Delta is calculated by finding the difference between the bid and the ask. Sellers are typically represented on the bid and the buyers are typically represented on the ask. This doesn't mean that you should automatically buy when there's large positive delta or when there's large negative delta. Personally, I prefer to look for traps, using a specific time frame to find large negative delta and trapping key positive delta at a level. So an example here would be, we're on a 30-minute chart. I love looking at delta on a 30-minute chart and I use it very frequently. First, we have a break of structure. You can see that this is a low right here and this candle closes under the break of structure. So now what will happen is sellers will typically try to play a breakout here, going into a short position represented by this negative delta. And what follows it is huge positive delta. So what is this? This is a delta trap. And now what I'm looking to do is long on this candle close after a break of structure followed by the positive delta. And you can see the amount of positive delta outweighing the negative. Typically, I don't always look for the net positive delta to outweigh the negative. I just want to see an extreme amount. And this is indeed an extreme amount. So typically, I would take the long at close. Now, I can tell the story of what will happen on a 30-minute chart just based off of the delta. That's how powerful it is. And this is a typical setup that I would look for on a daily basis. Now, the reason this concept works so well is because when these negative sellers, these negative delta sellers are trying to play a breakout and buyers step in, what do these sellers have to do when they become offsides, meaning their position becomes underwater and they're red? They have to buy out of their position. What happens when they buy? It brings positive delta into the markets, which helps push price up. So typically when you see these kinds of setups, you'll get very large moves off of them. So it's a super simple strategy and it helps you find where dumb money is in the market and to use them as liquidity to trap them. Now here would be an example on the 4-hour chart, right? We get a close of above this high right here, this internal high. And you can see that we do have huge negative delta right here. But the thing is that the candle closed green, so we're going to assume that buyers are still in control until proven otherwise. Now we get the huge positive delta above the break of structure, followed by huge negative. You can see that there's 2,500 and 2,600. What happens when this huge red candle comes in with huge negative delta right after a huge positive candle? These buyers are now offsides, and now they may be scared, and if they're not fully confident in their position, they're going to want to sell out of the position, bringing more negative delta into the markets. And you can see that we get a huge retracement down directly after that. Now the next feature that I really like to look for are imbalances. Now imbalances are formed when there is an imbalance between the bid and the ask on the candle. Now you can adjust these settings to make it where it's 300%, 350%, 400%, which are commonly the industry standards. Now what it means is when the bid is outweighed by the ask by, let's say, 300% 3 times, that will mean that sellers are 3 times as strong at that level on the bid in the two-way auction. Now it could be the opposite where buyers are 3 times as strong by the ask outweighing the bid by 3 times. Now there's different ways where you can look at imbalances to kind of have an edge. A way that I typically don't commonly use is by looking at aggression in a candle. So right here you can see that there is huge aggression in the candle because there's nothing but sell imbalances represented by these volume bars on the right. The reds are where the sell imbalances are, representing strong sellers, and then the green ones would be where the buyers are represented by strength. What I look for in this is looking for traps. Now you can read traps on this by looking for red candles with green imbalances, buy imbalances at the top of the candle, followed by selling imbalances going to the close. Then the opposite for green candles, where there's selling balances at the bottom of the green candle, followed by buying imbalances at the top, representing trap sellers with strong aggressive buys coming in. Now here's the NQ 5-minute chart. The reason I like looking at these imbalances on NQ is because there are a lot of imbalances on NQ. Yes, you will still get imbalances and you can still use this thing, the same concept to translate into ES, but it's very well and easy to spot on NQ. Now here is a great example of it. We have a inverse imbalance, meaning that the sell imbalances are coming in at the bottom 3 ticks of the candle, right? Bottom 3 ticks of the candle represented by this golden bar stretching out of the candle, followed by nothing but green imbalances, buy imbalances. So we can see is back-to-back candles of sellers getting trapped at the bottom, trying to anticipate prices going lower, but instead the candle closes green with buy imbalances coming in till the close. And obviously it doesn't get that much of a move up, only about 17 points. If you were to long out this one, you would get a larger move. But then we have the opposite case scenario here, where there is the green inverse imbalance, top 3 ticks having a imbalance of buys, followed by nothing but sell aggression, and then we get the large move down. Right, so that's pretty much the premise of looking for traps on imbalances within a candle. Once again, another example. Sellers getting trapped at the bottom of the green candle, followed by nothing but buying aggression. And you can see that right here. And then here's some more examples right here. With these candles, you can see that there's majority of sellers getting trapped at this level, and then we get the push up. And so this would be an example of finding really aggressive buys in the market, because there's literally no selling imbalances coming in off of this breakout level, and there's just buy imbalances, right? We don't even need the bid and ask to see the imbalances on a chart. We can, through the TDU footprint, we can just see the imbalances, so you don't have all that noise, and you can just look at the imbalances to see if sellers are getting trapped, if there's strong aggression in the markets. It tells you a lot of the story. And you can see that breakout has a small continuation there. And so here would be another example of huge aggressive sellers. You can see the red imbalances, no green imbalances at all, breaking this structure from low a day. And it would have taken some drawdown right there, 26 points, but eventually it gets a huge expansive move down. So there's different ways, like I said, you can read imbalances on the markets. You can either look for aggressive sides, or you can look for trap sides. So the next feature is a bit discretionary. There's a couple ways to read it. First is for looking for bearish or bullish POCs. Now a bearish or bullish POC would be defined as the following: a red candle with its POC in the top 3 ticks, and then a green candle with its POC in the bottom 3 ticks. Now the way that I like to trade this is using a value area. So if we were to pull up a value area right here, is looking for this bearish POC followed by a value area gap down, and I would look to take a short. Now you can see right here that there's 2 bullish POCs, but they don't have a value area gap up, so I wouldn't look to take anything. And then this would be an example of not having a value area gap up once again, so I wouldn't look to take anything. Now this would be an example of a super high quality I would look to take, because we have a bullish POC, the POC happening in the second bottom tick of the green candle, followed by a huge value area gap up, and I would look to take the long, right? And then on top of that, the next feature we're going to go into is thin prints, and it adds confluence because we have a thin print zone of support right here. So this makes it a super high quality play. Now the next way you can look for a POC, a bearish or bullish POC, is looking for trap traders. Now it has to do with combining the POC and volume. So pretty much on a red candle, you want to see the majority of the volume happening at the top, representing trapped buyers. You can see back-to-back examples here of where the volume is happening at the top of the red candle, and eventually we get a move down. Now here would be some examples of majority of the volume happening in the bottom third of a green candle, representing trapped sellers, and then we get a move up. Now typically I would not take these by themselves. You want to use them in confluence. Like this, for example, has a ratio and majority of the volume happening at the bottom of the green candle. So that could be a good confluence play. And so the next feature, which we slightly discuss, is thin prints. Now the reason thin prints are super powerful is because it shows aggression in one side. Now in this case, it's a green candle with a thin print happening on the bid because buyers came in super aggressively and they left behind an imbalance because they swept through that level, not allowing any contracts to be transacted other than the ask, most likely because they bought above the ask with a large amount of orders. So what this happens is it represents strong buying, and typically you'll get a move up after. And it's also great because if you were to mark out this level, it's potentially going to be used as support in the future. And now you don't directly just buy on this support. Typically what I like to do is to look for this bullish POC, right, as we discussed right before, and then right after we look for the value area gap up, which we also used this example before, but it's just a really good example of something that I like to look for. Right, so here would be an example of a selling thin print, and thin prints are good because they happen multiple times a day, which can allow for multiple opportunities to take a trade. But like I said, I like looking for that value area gap. It might be kind of hard to notice, but you can see the value area gap right there. And the value area is just where 68% of the majority of volume is being transacted. So it will mark out a value area in a candle. And so we have the thin print coming in with the value area gap down, and then you can see the market pushes down 13 points from there. And this is on a 1 minute ES chart. And this would be an example of a thin print coming in, but a play that I typically wouldn't take just because there isn't that value area gap up. And so the reason thin prints are really powerful is because, like I said, it really shows aggression in buyers. Typically these aren't a trap play I would look to take. If there is negative delta that is getting trapped, like here for example, we get the negative delta that couldn't push price lower, and then we get the thin print with the move up, that is a very good quality play. But I won't necessarily always look for negative delta get trapped, but if there is negative delta getting trapped, it does make the play more high quality. And so my final feature in the top 5 would be cumulative delta. Now the reason I like using cumulative delta is to look for divergences. And it's good because it's divergences based on order flow, which helps make it super powerful. You can see going into open here, we have price making higher lows, but cumulative delta is making lower lows. And so I would go on to a smaller time frame, and then I would look to take a long, or just look for a bullish candle, right? If we get inverse imbalances with buyers coming in through the top, or let's say we get a bullish POC, anything super bullish on a time frame I will look for to take a long. You can see that price has an expansive move up here. And so in this example, you can see that NQ's low is right here, but cumulative delta's low is over here. But on NQ, we did not make a low here. So what we can tell is that there's a bullish divergence in the market through the cumulative delta, and you can see that we get a push up from there. And then you can see we have another divergence directly after that, with NQ making a new high and delta making a new, NQ making a new high, but cumulative delta fails to do that. And so like I said, what I'll do is go onto a smaller time frame and look for a positive bearish confluence to take a short, or I would stay on the 5-minute chart and looking for something bearish here, right? Like inverse imbalances, we have a bearish value area, which this is a sign that I would look to take a short, and then that goes for a lot of points. Right, so hopefully you guys enjoyed today's video. These are the 5 features that I most commonly use on a footprint, and I personally find the most powerful. You can really take these features and combine them together to find a very high confluence play, a very strong strategy, and I really recommend you guys go out and backtest and find what you like to trade the most, and really use these confluences in your trading to build a strategy that you can find consistent profits with. But anyways, that's all for today's video, and I'll see you guys in the next one.